Hi and welcome to this week's Big Picture. This is Kim Watson speaking. What have we got coming up in the week ahead? Well, I'm going to be looking obviously as ever at the central bank sort of view. We cannot look this week at the sentiment from the asset funds, hedge funds, etc. because the data is not being kept up to date and it's so far out of date now. There's no point really having on here the most recent data, so I've taken it off for now so people don't get confused with that. It keeps us clear-headed. But what we can look at is what's being said by the central banks and what's coming out in the week ahead. And of course, technically, we can go and have a look at the charts. I'll put a high level trend on here so you can get a bit of a picture. So we're starting off with the US dollar as in a whole. Is it in the whole? There's a question. The Fed mentioned last week, as I mentioned, that they're ready to shift policy quickly and flexibly, and we saw that really follow through in terms of much more dovish news coming out and a big dovish tone coming through most speakers last week. We do have speakers going on to this week as well, right the way through, and I expect most of them to come out with the same sort of rhetoric. So it's without doubt they're sort of having a pause here. The pause could be a quarter, it could be 6 months, it could be a year. No one's really going to put any times on that, and it doesn't really matter. What it is there's a slowing down of the increase of interest rates, which some are suggesting is on the basis of the numbers not showing. Well, we haven't seen too many numbers yet. We've seen a bit of production numbers coming down a little bit, manufacturing numbers not coming in quite as good, but we're not seeing a significant sort of roll on the numbers yet. But we could still, as numbers become a bit more focused, we could see that. So we've got some inflation data coming out, PPI data on the 15th tomorrow. Not going to be a big mover, I wouldn't have thought, but the Philadelphia Fed manufacturing on the 17th might give us a little bit more volatility, a bit more guidance in terms of the manufacturing data coming through there. And then we got the G20, but the key thing about the US, there's two key things at the moment, is of course the trade wars going on with China and anywhere else they want to pick a battle with at the moment, which I understand, and I don't know if it's true because it's Trumpism. Whether Trump's sort of backing down a little bit on that, we'll see. But there's certainly the outcome of that trade war is, yes, China's selling less to the US, but the US is selling less to China. In fact, from what I've been reading, there's become this sort of anti-US product almost there now, and people are starting to buy more local home-produced cars, which have a knock-on effect across the car industry as a whole. So, but it could well be part of the consequence of when you start a trade war. It's not just the senior politicians that are at war, but the individuals start becoming more protective and buying their own goods, and unfortunately the US may get a dose of that and see that run through to them. Weakness in the US shutdown. Now this is having a knock-on effect, and the latest sort of word on the street is that people are actually becoming a little bit more anti-Trump, regardless of what everyone else is saying, and the fact that some of them wanted barriers or walls built or whatever. It's not a good thing. There's a limited number of people actually affected by it, but those that are affected pretty big time by it, and it's not giving the man in the street a great feeling. So all in all, there is this sort of turmoil going on, which could affect the dollar. So at last I've sort of starting to think a little bit different in terms of how it might think it, and there is a slowing down. So we could see an edging of dollar weakness. However, there's the dollar. The euro, I keep on saying this, there is nothing in the eurozone which makes it sound or feel any better than the dollar. And I think when we saw it this week, just past, the euro made the least gains, whilst we saw gains in the Aussie dollar, New Zealand dollar, Canadian dollar. We've seen little in the way of gains in the euro dollar in real terms. We saw it pitch up, but not to the significance. And when we look at the technicals in a moment, we'll see it has pulled back in, and to me it's almost in a bearish zone still. So it's not great for sure. Now, Draghi's annual report to the European Parliament is due to be given tomorrow, so that may create some volatility and may see a softening of the European dollar. We'll see, but he will have more details. He will be questioned, so that might create some volatility for the euro tomorrow. Moving to the pound, I'm sure most people, and certainly I am, fed up of hearing the word Brexit, but the vote is of course tomorrow. The volatility could certainly be through there. Why then is the pound rising? Well, apparently the theme is that given that there won't be an agreement in terms of any time soon, by the looks of things, and it may push on and there may be extensions, and the very fact that this is potential extensions, this is seeing a positive effect for the pound. So there you go, there's the theory behind that. I think it's iffy, depending on the voting goes on the 15th, we may get, we've got some very good technical points to be watching there actually, which I'll come on to in a moment, but that could certainly see the pound either dump, or if there was there's a big surprise and people do vote in the current agreement that's been made, there would be a significant, I think, increase in the value of the pound over literally almost straight away and running through for a few days. The numbers that have been released, obviously we've got the CPI and retail sales. Retail sales are expected to come in lower. There's been plenty of suggestion for that for a while, but CPI coming out on the 16th, these would be key things to be watching in terms of the state of the economy there, and numbers would be more and more important. As I said last week, the manufacturing data still seems to be okay in the main, so it's been relatively positive, bearing in mind Brexit's been hanging over the country for 2 years, dare I say. Okay. Yes, I know the pound got sold off quite a bit, but it could have been a lot worse than the doomsayers were actually suggesting. It would have been completely flawed by now, and it's not. Dollar yen, okay, no chances. I mean, sorry, I should go back to the UK there. The Brexit's dependent in terms of any interest rates, so I think we have got Bank of England and a few others testifying on the 16th, so that might give a bit more clue to them, but they'll talk anything against Brexit that they can. That's their job. So moving on to dollar yen, no significant releases coming out this week. It's been sitting in this downward trend. Is it about to turn? We'll see. We'll have a look on the technicals there, but it's pretty much in a downward trend on a weekly and daily basis. It's being used as a safety net. We're seeing money running into the yen in terms of safety. That may continue, and that again with the trend, with the sentiment and that as a trend, may see it roll over more. But there's some key points we've got to look at technically. Aussie dollar, no significant releases. I mentioned earlier in the year and late last year particularly, that there's not anything particularly bright fundamentally good for the Aussie dollar. However, technically it's starting to run and could push on. It's at again, technically it's at, there's a few of these currencies at the moment looking at sort of quite important technical points, so we'll talk about those in a moment, but fundamentally it could just roll over at some point really quite quickly. But this all comes about being a bit more dollar weakness than anything else, and then the currencies such as the Aussie dollar, the Canadian dollar and the New Zealand dollar are benefiting. The more commodity based currencies, they're benefiting accordingly. Talking about commodities, we move on to the Canadian dollar. The potential further increase of interest was the comments coming out last week's meeting, which is quite bullish. However, that is if oil holds or pushes up further, and so it's oil dependent, that statement. So any movements on the oil price could have quite an effect on the Canadian dollar now, because that's what traders would be looking for. Inflation is coming out on the 18th. That would be a key number on Friday there. So other than that, nothing. New Zealand dollar, no significant releases. We've got no chance for interest rate increases. We're just seeing, as I say, a softer dollar, and where there's the money going through to these three pairs more so, or have been going through to these three pairs more so. Could they roll over? The answer to all three, of course, is yes, technically. because the fundamentals are not particularly strong behind things there. So that's that. I should say that they may benefit, particularly Australia may benefit if there's some resolution in terms of trading with the US, because it does get I mean, its biggest trading partner is China, so if they start seeing the potential to push up again, that will have a fundamentally positive move on the Aussie dollar there. So let's have a look at the technicals running through here. Some of these charts, as I said, they're sort of key points. The weekly picture from the euro last week that ended up with a shooting star, so on that weekly basis we really not managed to close particularly above the 115 area, which will come down to the dailies here. The 115 area, it closed for the 1 day, but it's since pulled back. Where to from here? Well, it's struggling to even pull back to its daily pivot. We're seeing a lot of a real slowdown in these days, intraday for many hours, and then a sudden move. That seems to be the pattern at the moment, so making it a little bit more difficult on the intraday basis. But there's nothing solid here to say this is going to particularly push up. I was looking at it last week thinking, well, it's getting to that point that the daily 200 may come into play. It could still do if data doesn't come out particularly positively for the US there. We could still do it. It's not a million miles away. However, fundamentally the Eurozone is still flawed, so I think when it's all considered, the very fact that it couldn't hold up at this level and it's pulled back in, well, it may have just over tested it a little bit and may find support around these highs here, what the previous highs of the bodies, etc. We'll see. That will be key today. Tomorrow is key in terms of whether this is going to turn around here or just continue rolling back towards the 1340 area. So looking at the pound now, it's anyone's guess what's going to happen tomorrow in terms of the pound, but it's been pushing up positively. The spike down, a lot of people put it down to fat fingers. My fingers ain't that fat. But no, seriously, they put it down to fat fingers in terms of the spike there. It recovered well, quickly, solidly. It's pushed up since then and pushed up again last week and held on to the gains there, closing towards the top of the bars there. Friday, solid bar upwards there. Yes, it did chop around for a long time, and it's got potential for some whipsaw action this week. I think it's very difficult. Whatever comes out of tomorrow's meeting, it's going to be difficult times ahead here, and trying to look at anything apart from saying that okay, it was maybe a fat finger move, but that it could have been cause to see a further sell-off here, but it pulled back so strongly quickly a week or so ago, and last week where it's consolidated around the highs here, pushed through on the Friday. If anything, that may suggest, well, we could see some further upside technically, but Brexit's there, and just to give it a good kick in. Dollar yen, well, it's again, spike really spoilt things there. It almost retested the prior lows there, came in the sort of key area where it's been sitting over the last week. It's just been consolidating. It's got the chance of rolling though, technically. Now some may say, well, it's a good point here maybe to buy it. It pulled back so quickly from making its gains and didn't manage to hang on to them, but well, we'll see. I guess it's a low risk buy if you were thinking this is going to turn around here. Sorry, I'll come down to a 4 hourly. I was just looking to see what we could see aside of the obvious here, but it's maybe a low risk buy. Maybe if it breaks that daily 8, it sort of may give a bit more confirmation, but for me at the moment, I think with the risk that's out in these markets, we could see money running back into the yen quite quickly. So the 107.57 area is key in terms of over the next couple of days. If it breaks that level, well, I think we could see the rundown of that spike. Aussie dollar, as I said, fundamentally it's not looking fantastic, but from a weekly point of view here, it's put into a bullish pivot swing kicking in here. Break of the highs, we could see it going and testing that trend line, maybe even pushing further. It's almost unfounded, as I say, but you know, it's just the way the dollar, the strength of the dollar with the US dollar, with fewer interest rates, it's probably been just saying, well, actually, it's getting a bit more flatter now, so there's a chance for some of these markets do quite well. As I said, there could be a positive. Sorry, I've come through too far. It could be reason for more positivity for something like the Aussie dollar. At the moment, I wouldn't try and sell against it. I know some may be looking at it. The daily 200 at the moment seems like in this is what we've seen here. It was certainly, as I say, one of the stronger markets last week against the US dollar, and it's not really given big reason at the moment to consider anything else. A break above Friday's high there may see that 200 a bigger possibility. Or Canadian dollar, well, we've been given the guidance. Look at the oil price, check with what's going on with the oil price. If the oil price continues to increase and stay stable, more chance of an interest rate increase. If it doesn't, more chance of it rolling, and so that we will be dictated by such. At the moment, on a weekly basis, there is argument that this is still higher lows, higher highs. It's not broken that sort of drift at the moment. Yes, it's sold off here, so it's that sort of rollover, and it could, and this is sort of a key area we're sitting here, is it's consolidating rather than selling off further. It's trying maybe to pull back to some of those key areas. It's hit the weekly pivot. For me, we'll see how it runs, but I think traders are going to be watching what's happening with oil. So we'll have a quick flick through onto the oil chart for the dailies here and see what's happening. And look, it's sort of a bear flag, you could argue. It could sell off from here, but it's from a trend line perspective, it's broken some of those. It's put slightly higher lows in. A push up above $53 could be good for the Canadian dollar, and see traders think, well, more money needs to go into that, so the Canadian dollar could roll over somewhat further. So some may be looking for this retracement if it comes back anymore as a sell point. So we'll see. That's the Canadian. Finally, the New Zealand dollar. From a weekly perspective, it's broken some trends here, again bullish pivot swings sort of sitting in there. It's got the potential to run up further towards the 50. The 200 has not been hit. 50's been hit before. That 200 may be a next sort of target. The 100 above there, pretty much at that point there, it may be worth reviewing, but for now it looks erring on the more bullish side. Again, it outperformed last week. It's and it looks pretty solid in terms of this move at the moment. So a push up towards those prior highs. The monthly R1 there at 69, around about 69, just over or just under, around that sort of area, and then pushing up towards 69, 20, 30 sort of zone. So it's still got the potential to shove up. What about the equity markets? I hear you ask. Oh no, you haven't asked that yet, but I'll tell you anyway. So weekly perspective, well, we saw the pivot swing. We've seen a move pushing up. For last week it pushed up beyond. We've got some data still coming out. There's some big boys reporting this week, so we could see some movement there. An agreement made with Trump and China, if the G20 sort of goes well in Japan or whatever, it could be all smiles at the end of the week. We'll see. But it's looking better at the moment. It's still in the downward trend in terms of lower highs, lower lows coming through there. Potentially it could roll from somewhere near where it is at the moment. It's sort of key resistance levels. In fact, I'll go back to the weekly there for a moment, and it's just through the 8 there. So maybe a lot of these moving averages are still facing upwards. Okay, the short-term ones are crossed over and looking sort of quite bearish. But at the same time they could provide some resistance. We'll see, but for now, with a higher low confirmed on the dailies, it's bearish on the weeklies, bullish on the dailies at the moment. So that's where we stand. Nothing else to add there. News wise, I've covered that as we've gone through the different markets there. The G20 will be key, but obviously Brexit for the pound on Tuesday. Have a great week. I'll speak to you next week. Bye for now.